And now it's time for Development Debates. We dig deeper into some of the questions shaping the future and present of China. Today, our debate topic is about foreign exchange reserves. The former chairman of the China Banking Regulatory Commission, Liu Mingkong, recently said in a speech in Washington, D.C., that almost half of China's reserves were in U.S. treasuries. China is the second largest holder of U.S. treasuries, second only to the Federal Reserve. Market analysts generally believe that nearly 70% of China's foreign reserves are in U.S. dollar assets, including treasury notes. Data from the central bank shows that by the end of the first quarter of 2014, China's foreign exchange reserves amounted to $3.95 trillion. China's foreign exchange reserves accounted for one-third of the total foreign exchange reserves for the entire world. With it, China's become the world's largest holder of foreign exchange reserves. One assumption of having large reserves is that it could give the holding country leverage over other countries. The idea of China being able to manipulate foreign affairs with reserves is commonly heard. But even with the positive strength from holding the reserves, there's big risk involved. The central bank using a base currency to buy more foreign currency can cause inflation. In the last few years, domestic housing prices have been largely affected by the growth in reserves. The large amount of foreign exchange reserves has gotten the attention of many experts. Huang Guobo, the chief economist of the State Administration of Foreign Exchange, said, "The huge foreign exchange reserves could be a good thing for China." Huang pointed out that keeping a large foreign exchange reserve is important for a country. He added that over the past 10 years, the large foreign exchange reserves have had major benefits. They prevented exchange rates from rising too fast, lessened the impact of the global financial crisis, supported rapid economic growth, residents' incomes, and fiscal revenues. However, the Phoenix TV commentator Hu Shizhe expressed a different point of view on it. He said that excessive foreign exchange reserves are a disaster. He said the huge foreign exchange reserves are the result of the central bank deliberately intervening in exchange rates for years to prevent the appreciation of the renminbi. He started by explaining how reserves work. Hu said the increased revenues were a result of appreciation of foreign exchange assets. But the main reason is that the central bank continuously sells renminbi to buy dollars. He said that to be successful buying dollars depends on the purchasing price being higher than the market price. He did that to set up his point. The central bank is selling the renminbi to promote depreciation. He said the huge foreign exchange reserves will cause long-term underestimation of the renminbi exchange rate. It led to distortion of the economic structure and huge inflation. Hu said the central bank printed money to buy foreign currency so that inflation could happen. The central bank was deliberately keeping the yuan undervalued to help out exports. This would have increased incentive for foreign countries to buy from China. The amount of foreign exchange reserves was a figure he chose as an example. This move sharply decreased the purchasing power of the renminbi. It will cause huge losses to the holders of the renminbi. He then arbitrarily stated that imports and exports is what China should do to succeed. He then pointed out that this isn't what China is doing. He thinks that China is actually doing it for the benefit of foreigners. He said their exports are only helping build up the foreign exchange reserve. And this, in a way, is subsidizing American consumers while inflating costs for Chinese people. So in this debate, we looked at two people's views on foreign reserves. One is that buying reserves has helped China control its currency, which has helped control its exports. And those exports have been a major driver in the economic growth of China. The other view was an oddly nationalistic one. It seemed to argue the central bank is only buying foreign reserves to benefit other countries.